A new Gallup poll is out, finding Americans plan to spend much less this holiday season, just $805 per person. That's down from $942 last year. What does it mean for mall operators? Let's ask the owner of properties like the Grove in Los Angeles and the Commons in Calabasas, Caruso Properties founder and CEO Rick Caruso. Good to have you on the show again, Rick.
Thank you. Good morning.
Those Gallup numbers don't bode well for the holiday shopping season, but you're feeling optimistic. Why?
Oh, I think there's hope for the holidays. And I'm not a real fan of these Gallup polls or any kind of polls that take a look at a national level, because the reality is the country is very different geographically, and we're going to go into different weather patterns, and we've got different types of properties and different types of stores. Now, let me tell you what we're seeing on our properties. We're seeing growth week over week, month over month. And we're seeing a very high conversion guest, meaning the people that are coming onto the property are spending more, they're converting to greater sales, and the conversion, the spend is about 40% higher. So we're down on our properties across our portfolio about 10 to 12%, which, given the fact that there's less people, shows there's really a committed shopper who's looking forward to getting out, having an experience, and is actually buying. But you know, that's our experience. We are blessed here in LA with good weather and sunshine, and we have all outdoor properties. And we also have, you know, incredible retailers that are best in class.
There's also, though, probably, Rick, a ton of pent-up demand from being locked down for so long. Yeah. And there's the impact of the stimulus and the higher savings rates, which we know are starting to get drawn down. I think the question is, how sustainable is the kind of boost that you're seeing?
Well, I think it's a fair question, but remember, September was the first month we didn't have stimulus, and we still had growth in sales. In fact, nationally, you had growth in sales, almost 2% on retail sales. So that does bode well. So I think what you're going to see is there may be a tale of two cities as the East Coast, the Midwest is getting colder, the West Coast stays warmer, to see how things play out. But I think your point is a really good point. There's pent-up demand. There is definitely fatigue over COVID. People want to get out of their houses. They want to have an experience. They want to be with their family and friends, doing it in a safe way. And I really think people want to celebrate the holidays. We sent out 130,000 emails as a survey to customers. 85% reported back that they're going to be on our properties to celebrate the holidays. And the number one thing was to have festive decor, and the number two was to shop. So I'm feeling good about it. And I think there is going to be a really, really high demand for people to get out of their homes.
Yeah, amen to that. I think a lot of people feel that way, Rick. But, you know, at the same time, none of us know how this virus is going to keep moving. Unfortunately, we're hitting new high case counts. I mean, I know you can't predict that either, but, you know, you seem fairly confident. If we still continue to go up, are things going to change? I mean, go up in terms of new cases every day?
Well, you know, it's a good question. I don't know. I mean, consumer behavior, we're a little bit more tolerant. I think people are more comfortable with safety. I think people now also realize if you wear a mask, and we require that on our properties, and you have social distancing, you can be in a much safer environment. So people are out, and I think we all have to learn how to manage this. We've learned a lot from it. But there's also, you're right, there's that fear factor that if it really spikes, more people may stay in. Again, I think a lot of it is going to depend on age, demographics that are going to impact how people really work through the holiday season if there's a spike in COVID.
Shepard Smith here. Thanks for watching CNBC on YouTube.